Hi Kush, a very good morning to you. Thank you for joining us here on First Sec.
Very good morning. Always a pleasure to be here.
Now, Kush, we are about, we have actually over 1000 points from that October swing low of about 18,837 or so. And finally, yesterday we managed to close above the 19,800 level. We are building on to those gains, have reclaimed that October swing high of 19,843 on an intraday basis. Although we have corrected from that 19,875, which was the November high. What's your overall, appraisal of the market? Are we heading towards new lifetime highs anytime soon?
It's just a matter of time. I would say, we're headed there for sure. The run may not be as smooth as we want, but you're right that, the recovery has been stupendous. I'm sure everyone expected this kind of a move up, on the indices, at least from the momentum, front. The
Hmm.
direction was perhaps clear that, the Indian markets are a buy on dips market and continue to remain so.
Hmm.
But the pace of the, recovery has been stupendous. Now, if I just come in from a technical angle, 19,800 is more of a psychological resistance.
Hmm.
The actual technical resistance comes at around the level which Nifty is at currently, which is 19,850, because that's the high that it made in October before it sort of broke down and made that 18,800 kind of move.
Right.
So we are very close to that. I don't see Nifty crossing this level and closing above that, at least not by a big margin today, at least given that it's a weekly expiry. Perhaps tomorrow and the next week, once this weekly expiry hangover is over, we
Hmm.
could make a dash towards 20,000. And once that is taken out, then 20,200 isn't too far, is it?
All right, that's the view on Nifty. 20,000 on the cards, 20,200 could also be seen on the index. But sir, also want to touch on Bank Nifty. Quite an interesting expiry day yesterday. Wild movements we saw when the index slipped to around 43,300 sort of levels, and the index had been in the last few sessions taking support around the 20 and the 200 DMA. We broke below those levels on an intraday basis, closed above them and near the 20-day moving average. Up, the index overall is up about 139 points or so, trading in the green. What's your view on Bank Nifty? Was the yesterday's sharp rise from the day's low, was that the pivot we were looking for?
Well, we could, deep dive into this, but my only thing is that it's an expiry day move, and we
Right.
don't read too much into an expiry day move because, the max pain theory sort of tends to prevail, which is
Hmm.
wherever you see the maximum open interest built up, on the put and the call side, the indices do tend to close, either within that range or close to that, magic number where the open interest is the highest.
Hmm.
So it could perhaps be just that move. And you're right. See, the Bank Nifty setup isn't really very encouraging, just yet. There is a gap from 4800, 43,800 to 44,100 that needs to be filled. The
Hmm.
one that came when the RBI announced the, curbs and the measures for consumer lending. Consumer lending. So that's a range that the Bank Nifty will look to test, even on the upside. Had this not been, the party spoiler, we could have perhaps been trading close to that 20,000 and above 20,000 mark as well. So this
Hmm.
will continue to remain under pressure. 43,800 is the level that I'm looking at. A closing or two above this could push this index higher.
Hmm.
In fact, on the contrary, if that doesn't happen, then we're looking at 43,300 and 43,400, where the 20-day moving average and the 200-day moving average coincide. If we break down below 43,300, then I'm afraid 42,800 kind of levels also come into play. So very delicately poised right now, Bank Nifty. Very interesting to watch. If the FII buying does sort of return or the selling quantum does stop, then banks could take support here and rebound. So very interestingly poised. I would actually play on the Nifty rather than the Bank Nifty at the moment.
All right, play on Nifty, avoid Bank Nifty for now. But moving on to specific stocks, one of the stocks that we have been very closely tracking since its listing is Honasa Consumer, the parent company of Mama Earth. Now, they came out with a Q2 report card yesterday. The profit has nearly doubled to 29 crores or so. Revenue is up 21%, as you can see on your screen. Revenue for the second quarter rose by about 21% to 496 crore. Net profit grew by 93 crore for the quarter on a year-on-year basis, so pretty much doubled. EBITDA, the earnings before interest, tax, depreciation and amortization, were up 53%, and margins expanded from 6.4% in the year ago to 8.1% in Q2 of FY24. Overall, Kush, the numbers are looking rather healthy, and wild movements again we have seen in this stock. After the listing, we saw deep correction where the stock slipped to about 256 sort of levels, corrected by about 20% or so since its listing price, and then Jefferies came out with its buy call, and with a target price of 530, implying upside of 50%, and from there on we saw a good bit of rally where the stock has gained about 10-15% in a matter of few sessions. What's your view on Honasa? Is that a stock one can look at, and what are the levels you are tracking over there?
Well, so very honestly, since it's a very recent listing, there's very limited data on the charts to sort of, make any kind of comment. I mean, the only thing I can say is, kudos and congratulations to everyone who invested in the IPO and didn't perhaps sell off when the stock, hit the lows and went, close to 250 odd levels.
Right.
So if you've been holding on, why not ride the momentum rather than perhaps, sell it out early? We typically have a very clear strategy in such plays, momentum plays, which is a trailing stop loss. So if I had this stock and if I was holding, this one till now, I would place my stop loss at 400 and, just ride the momentum. If it comes below that, might as well take some money home.
All right, that's the view on Honasa. Perhaps take some money out, but ride the momentum for now. Another new age company stock I wanted to touch on with you was Zomato. Now, we have seen some bit of weakness set in the last 5-6 sessions or so, where the stock has given up about 8% or so. But a clear outperformer in 2023. The stock turned multi-bagger last month. It's still up about 90% or so in 2023. What's your view on Zomato? Is the stock taking a breather perhaps over here, and we could see more upside from here on, or is this where the ceiling was for Zomato?
So let me just put things in a slightly different perspective. When the stock started to break down after the after the IPO, it did see a bit of a run up and then it started to cool off. And if you remember, if you go back to December 2021, 130 was the level where a lot of buying had come in, from various participants, be it retail, HNI, and the stock took a while before it convincingly broke down below this 130 level. So I was not surprised one bit to see that, even before we hit that 130 level, this is a bit of a preemptive selling, as we call it, a bit of a self-fulfilling prophecy that 130 was supposed to be a resistance for that. And
Right.
everyone thought, why wait for that level? Even if it's a marginal loss, from 130 levels, take some money, take the money home, take your capital out with a marginal dip. Remember, people had seen levels of 40, 40, 45 on this one. So everyone was happy to perhaps take just a 5 rupee cut on it.
Right.
That's what we are seeing play out. I think once this selling pressure is over, the stock will resume its uptrend. So, in the near term, the stock could see pressure, but I'm happy if anyone's looking for a fresh entry into this stock, the current levels, 114, in fact, I would say let it slip to, even 105 kind of zones. So this 10 rupee range, this 10% range is a good range for you to start accumulating this stock. Once you do that, 130, the resistance zone will act as your first target, and once that is taken out, don't be surprised that the stock moves to 150 and higher levels also. So more of a positional play, playing out beautifully on the technical charts. So this is an accumulation zone. Gradually start accumulating these stocks in this dip.
All right, that's the view on Zomato. Another stock, Kush, I wanted to touch on with you was TVS Motors. Now, TVS Motors has in fact scaled a new 52-week high. The stock, I'm made to believe, is up 2% or so, and made a new 52-week high of about 1780 rupees. And if we look at the comparison between all the two-wheeler stocks, it has been a clear outperformer. On a one-year basis, TVS Motors is up about 65%, whereas Eicher Motors is up about 13% or so. Bajaj is also up about 60%. So very close returns, but TVS has been an outperformer. What's your view on TVS? Perhaps time to book some profits now, given the kind of returns we have seen in the past few months and the year on the whole?
So let me just quickly address iShare here. We know there
Hmm.
was, some competitive pressures that came in, on iShare, and hence, there was a pause that the stock took, a knock that the stock took, and then it's starting to revive again. So
Right.
it not be a bad idea to, invest in a stock like iShare, which has been a wealth creator over the last, many years for investors. So, just might turn out to be a buying opportunity this dip.
Hmm.
As far as TVS Motors go, well, it depends on your time horizon. If you're a trader, you might want to take some money home. In fact, we had also recommended this stock as a part of our advisory service, for targets of 1800, and we're fairly close to that right now. So
Right.
if you're a trader, you might want to take some money home, book your profits. Not a bad idea because the stocks actually run up quite a bit.
Hmm.
But if you're a long-term investor, there isn't anything that is suggesting that the momentum could stop or halt in the near term. So
Hmm.
why not hold on to this one? We won't be surprised to see 2000 or above kind of levels in the stock in the coming months.
Oh.
Fresh entries should only be made on dips.
Hmm.
But if you're a trader, take some money home, and if you're an investor, just continue to hold your positions.
All right, that's the view on TVS Motors. Take some money home if you're an investor. Perhaps, sorry, if you're a trader, but stay invested for long term gains.